Greetings, traders. This is Shane with Futures IO coming to you from bright, sunny, and beautiful Indiana Dunes and streaming live across the world. We're pleased to have you here and thank you for joining us for our 421st webinar event. If you didn't know, I'm here to tell you that Futures IO is probably the best trading community on the planet. We've got over 150,000 members. We're dedicated to bringing you quality education and webinars such as this. The atmosphere is polite and respectful. Please feel free to join us. You heard me mention this was our 421st event, which means that our YouTube channel is hosting 420 trading videos covering just about any topic you can think of. It's totally worth checking out. While you're there, do us a favor, hit that like button, share with your trading peeps, and subscribe for the latest updates on social media. You can follow us on Facebook and also on Twitter at FuturesIO. Today's topic is a pretty hot one, man. CME Group's new micro Bitcoin contracts. Joining me today are Mike Murphy of Iron Beam Futures and John Bria of CME Group. After the presentation, we're going to have a Q&A session with John. He'll be glad to answer any questions you may have. As always, the event's being recorded and it'll be posted on the Futures IO website and YouTube within 24 to 48 hours. All righty, I think we're ready to get going. We're with Mike and John. How you guys doing?
Doing well. Thanks for having us.
Yeah, fantastic. Well, with that, I'm going to hand it over to you guys. Go ahead and feel free to share your screen and take it over.
All right, Shane, can you see my screen?
Yeah, looking good.
Perfect. All right, good afternoon, everyone. Thanks for attending today's event, and big thanks to our host, Futures.io, and Iron Beam for having me here to speak about this very exciting product launch, which are micro Bitcoin futures at CME Group. First, a little bit about myself. My name is John Bria. I'm a director of retail, client development, and sales. I've been at the CME Group for 5 years now, and in my role, I work with the retail brokerage community and helping our brokerage partners to one, list our contracts and offer them to their customers, but then another aspect of my role is to help promote our products and educate the retail community on the benefits that futures and options on futures can present the retail trading audience. So very excited to speak about this upcoming launch of micro Bitcoin futures, and I want to highlight that these products are launching this Sunday night at 6 p.m. Eastern time. So they're not live yet, but they will launch this Sunday night at 6 p.m. Eastern time. And we're excited at the exchange because we think that this product presents just an enormous opportunity for all various types of traders. So let's get into the content here. So right into a disclaimer. So we at the CME Group, we want to acknowledge that futures trading isn't suitable for all investors. Futures are leverage products, and these products can involve the risk of loss. So before going into any new market or any new product, please ensure that you're properly educated and you do your homework. Okay, here's a look at the agenda. We're going to split our time into 3 parts today. Part 1, we're going to discuss crypto and the crypto futures background at CME Group. Part 2, we're going to talk about the future fundamentals and the benefits that these micro Bitcoin futures can offer. In part 3, we're going to look at some of the trading opportunities within these new micro Bitcoin futures contracts. Part 1. So what's the narrative? Why is a 170-year-old exchange foraying into cryptocurrency? And the short answer is that there's enormous customer demand for this product today. We do have a Bitcoin futures contract that is of 5 Bitcoin. The underlying of that is 5 Bitcoin. So as the price of Bitcoin has really appreciated over the last 6 months or so, the notional value of that contract has really priced out a lot of market participants. So as such, and per client demand, we're launching a smaller Bitcoin contract, a micro Bitcoin futures contract. And this micro Bitcoin futures contract is 1/10 of 1 micro. So the exposure on this small contract is 1/10 of 1 Bitcoin. So Bitcoin today is trading at 54,000 and change. So the notional exposure on this new micro Bitcoin contract is going to be $5,400 and change. So on top of that, very low interest rates and all this stimulus money is chasing money into some alternative asset classes such as cryptocurrency. And Bitcoin being the largest cryptocurrency in that bucket, in that landscape of cryptos. And Bitcoin is rapidly earning this reputation of a digital gold. Gold has traditionally been looked at as this safe haven asset, right? But gold's been stuck in this range for the past year. It's about a $300 range where there really isn't much trading opportunity in that product. So traders are looking at these alternative asset classes for opportunity. We're also seeing giant adoption by Fidelity, BlackRock, Goldman. You have corporations like Tesla that are foraying into cryptocurrency. You're also seeing some wealth management organizations at some of the big wirehouses start offering crypto exposure to their ultra high net worth individuals. And they're using this new alternative asset class as a diversification tool. And one of the appealing aspects of these cryptocurrencies is the underlying technology. The blockchain technology on which these cryptocurrencies are based, this blockchain technology is gaining widespread acceptance globally. And then not to mention the astronomical returns in 2020 and 21, there's just a ton of volatility in Bitcoin and some of these other cryptocurrencies that really are attracting investors and traders to go and see some price action and trading opportunities in those products. And what we pride ourselves in at CME Group is the ability for traders to come to us to manage risk. And when we're launching this micro Bitcoin contract, what we want and what we intend not only is traders to come to our markets to speculate on the price action, but we're also expecting some cash traders, some cash crypto traders to come and use these products to hedge some of their cash portfolio. Because what you can do with futures that you can't easily do on the cash crypto side is you can go short is just as easy as you can go long on the futures contracts. So let's take a look at the landscape of cryptocurrencies in relation to other asset classes. And this slide is a little dated. It's a slide we put together back in January. And now the actual market cap on all cryptocurrencies has just surpassed $2 trillion. And Bitcoin is about 50% of that today at just over $1 trillion. So you look at $2 trillion and Bitcoin being $1 trillion, and you compare that, that's bigger than Amazon. The entire crypto landscape is bigger than Amazon. The entirety of the USD in calculation, or in circulation, I mean, is $2 trillion. And then you look, when you compare that to gold, gold's been around forever, right? These cryptos have been around for almost a decade, and they're encroaching on that gold market cap because of the reasons gold's been trading in that range. Some money is coming out of gold, and they're diversifying into some of these alternatives to exploit the opportunities that they're seeing in this evolving emerging market. And here we're going to look at the top 10 cryptocurrencies by market cap. Again, this is a little dated because it was put together in January 21, but Bitcoin is the biggest today. It's the largest cryptocurrency by market cap in the cryptocurrency landscape. So we have a standard Bitcoin contract today, Bitcoin futures contract. We're launching the micro Bitcoin futures contract on Sunday night. We have an Ethereum futures contract. You see Ethereum is the second largest cryptocurrency by market cap. We launched the Ethereum futures contract on February 8th of this year, and it's doing pretty well. It's seeing steady growth in volume. We'll go over that in a few slides. And then you see the other more popular cryptocurrencies. You have Tether, you have Ripple, Polkadot, Cardano, Litecoin. So these cryptocurrencies are really generating a lot of interest. And as you can see by this slide, there's a lot of money flowing in and out of these new asset classes. So let's talk about the evolution of cryptocurrency products at CME Group. So as I said before, we're a 170-year-old futures exchange. We were founded on commodities, right? And we're a pretty conservative futures organization, futures and options on futures organization. We got into the cryptocurrency space back in 2016 because of customer demand. Customer demand on the institutional side back then was telling us that we have to look into cryptocurrency, we have to create an offering. So the first thing that we did was we looked at the data in the cryptocurrency space on the cash side, and we created market data reference points. And we created two products back in 2016. The first product we created was a Bitcoin reference rate. And what that reference rate is, it's an aggregate of trade flow from 5 major Bitcoin cash exchanges. And it takes all that flow during a specific calculation window and publishes a once-a-day reference rate between 4 and 4:30 p.m. London time every day, including holidays and weekends. And then the second data product that we created in 2016, it's not listed on the slide, but it's called the Bitcoin Real-Time Index. And that Bitcoin Real-Time Index, it aggregates global demand to buy and sell Bitcoin, and it aggregates it into a consolidated order book that indicates the fair and instantaneous US dollar price of Bitcoin at a given moment. And that's geared toward low latency and timeliness traders based on a forward-looking input data. And the index is published every second of every day, including weekends and holidays. And in a couple of slides, I'll show you on our website, if you're interested in taking a look at both those products and taking a look at the construction of them, I'll show you on our website where you can find that. Then you'll see in 2017, we launched our current Bitcoin futures in December of 2017. At that time, it was when Bitcoin was taking off, and it was reaching its high at that time, which was around 20,000. So in December of 2017, we launched our original standard size micro Bitcoin futures. Those futures are, the underlying is worth 5 Bitcoin. And then in 2018, we looked at Ethereum and we created the Ether dollar reference rate, which is basically the same as the Bitcoin reference rate, but you're just looking at the amount of Ether that the trade flow for the Ether on the spot exchanges. So that Ether dollar reference rate and the Ether real-time index were launched in 2018. Last year, we launched Bitcoin options. So we launched an options contract on our standard Bitcoin futures. So we launched those last year. They're seeing some pretty nice adoption. The ADV on those have been growing steadily. On this slide, you'll see there's over 42,000 contracts traded globally. I think that's a little higher now. And then, so it brings us to today. It brings us to February. In February, we launched the Ether futures. The Ether futures, the underlying on that contract is 50 Ether. So 50 times where the spot price of where Ether is trading or where the reference rate is, that's the notional value of those futures contracts. And those launched almost 3 months ago. And we've seen a lot of individual traders come into those products to take advantage of the price action on those futures. And then this brings us to today, talking about micro Bitcoin futures. Those are launching May 3rd. We're saying May 3rd, but they are actually launching on May 2nd. So when the futures markets open this Sunday, May 2nd at 6 p.m. Central Time, 6 p.m. Eastern Time, the micro Bitcoin futures will launch then. So here's a look at the reference rate. It's exactly what we just talked about. I'm not gonna go over these two slides again, but here is on our website where you can see the reference rate and the real-time index, and you can go to our site at any time to get both of these. And you can actually subscribe to them if you want them sent to you throughout the day. So if you go to cmegroup.com/Bitcoin reference rate, you can find this page. This is exactly how it's displayed on our website. All right, so let's take a look at how the Bitcoin futures and the options on the futures have been trading so far. So in Q1 of 2021, Bitcoin futures adoption is rising. We're seeing all segments from the exchange come into these markets and start trading these products. So on the big Bitcoin, you're seeing an ADV of a little over 13,000 contracts, which is about 67,000 Bitcoin equivalent. So there's a lot of money coming in and out of this market every day. The average daily open interest is a little over 10,000 contracts, which is almost 52 Bitcoin equivalent. And on the Ether futures, we're seeing an ADV of 850 contracts a day. So we're building the liquidity in that market. We're off to a good start, but there's still a ways to go on that. We're hoping that this micro Bitcoin contract can bring some new traders into our markets, and then they'll see the opportunities in these other products, particular Ether, and see how they can, spread between these contracts and or capitalize on some margin efficiencies if they're trading those contracts together. And then when you're looking back on 2020, Bitcoin futures, the ADV on the Bitcoin futures was a little over 8,700 contracts, which is a 43,000, almost 44,000 equivalent of Bitcoin, which was up 38% compared to 2019. And then what I want to look at is the accounts trading here. If you go all the way to the right, the other highlights here, the accounts trading, there's 7,200 futures accounts, individual futures accounts that are trading these products on the future side, and 190 accounts trading the options. And that's growing each day. So we're really optimistic and excited to see these accounts trading numbers grow. And we're looking forward to seeing them grow even further with the micro Bitcoin contract coming next week. So let's take a look at this graph on the price action of Bitcoin. So as you can see, Bitcoin's really taken off since, September is when that rally started, last September, and now we're all the way up to, I think it's 54,000 and change right now. And this graph shows it going up to almost 60,000. So there is price action in Bitcoin. Same thing on the Ether side. Price action started around the same time. The prices are kind of closely correlated. Once Bitcoin and Ethereum both took off in 2020, they've reached these pretty high price levels now. I think Bitcoin or Ether is trading a little over 2,000 today. So here's another graph looking at the ADV growth of our current Bitcoin futures contract. So this is just showing that since December 17, we've seen some steady growth, but we've seen some real growth from like mid last year, and we've seen it take off at the beginning of this year. There are a lot of institutional traders coming to us to trade our current Bitcoin contract. But again, those underlying on that contract is 5 Bitcoin. So it's a substantial contract. It's the notional value on that alone. It prices out a lot of other segments, specifically retail and the active individual trading community. So here it is. Bitcoin futures institutional interest and accounts are expanding quickly. So you'll see here the open interest, which we like to look at the open interest to see, we use it as an indicator of the health of the market, like the blood of the market. So you'll see here that the open interest on that standard Bitcoin contract has risen steadily from going back to April of 2018. And we do want to highlight that this is a competitive landscape. We're not the only exchange that offer Bitcoin futures today. So you'll see that the CBOE and Backed exchange has another contract out there, but if you compare it to CME Group, a large portion of the volume in these contracts are coming from CME. And you'll see the CME participation is much higher than these other exchanges. So the volume, the open interest, the market participants are over at CME Group. All right, so going on to part 2 here. We're going to talk about futures fundamentals and the benefits of these micro Bitcoin contracts. So let's take a look at the specs on this new contract. So the contract size, again, is going to be 1/10 of 1 Bitcoin. So if Bitcoin Cash is trading today at 54,000 for one Bitcoin. The micro contract will have a notional exposure of $5,400. The ticker on this new contract is going to be MBT. Notional value, we just went over that. The minimum price fluctuation in this contract is going to be $5 per Bitcoin, which is 50 cents per micro Bitcoin futures contract. So it's 50 cents a tick. And the trading hours are on these contracts are consistent with all of our other futures products, whereas the trading begins on Sunday night at 5 p.m. Chicago time, 6 p.m. Eastern time. It goes all the way to Friday at 5 p.m. excuse me, Friday at 5 p.m. Central time. All right, there's a 60-minute break each day at the beginning of 4 p.m. Central time, where we run our batches and send all the order flow to our FCMs. And then the listing cycle, these will be monthly contracts. So these micro Bitcoin contracts will be monthly. There will be 6 consecutive contracts listed, inclusive of the nearest 2 December contracts. And then the settlement, I want to point out on this contract, the final settlement of this micro Bitcoin futures contract is cash. So it's a cash settled product, meaning at the end, if you hold this to expiration, your position will settle into cash. You will not receive physical Bitcoin once this contract expires. And the termination of trading is the last Friday of the contract month at 4 p.m. London time. So if you are holding a contract, you don't want to go to expiration. You want to make sure that you roll that position or you flatten that position before the last Friday of the contract month. All right, so quickly going over expirations. As opposed to the physical crypto trading landscape, futures, these micro Bitcoin futures, like all futures, have expiration dates. And most trading and most volume, I should say, occurs in that front month. So when you're nearing that last trading day, be cognizant of the volume leaving that front month and going into that deferred month, right? You don't want to be caught in an illiquid market. So be very cognizant. If you are holding these products for an extended period of time and you're going towards expiration or you're nearing expiration, be cognizant of where that volume is and when you want to roll your position to the next month. So what happens when futures expires? Micro Bitcoin contracts, like we just explained, these are cash settled products. You will not receive physical Bitcoin when the futures expire. So traders have 2 options when expiration approaches, right? You can allow the contract to expire. Your position will expire and settle into cash. And that cash settlement will be based on the Bitcoin reference rate. So the Bitcoin reference rate, remember, is published every day around 4 or 4:30 London time. So the Bitcoin reference rate on that day of expiration, if you hold your position to that, your position will expire against that rate. Or you can roll your futures position, meaning you can simultaneously either buy or sell to flatten your position from your existing position, or simultaneous buy or sell a position to establish a new position in the following expiration month. If a trader desired to maintain a long or short position in micro Bitcoin after the expiration, they'd simply execute a spread transaction involving buying, selling the expiring month and selling, buying the next contract month. So it's exactly what we just went over. So very basic. Let's quickly go over this. How much is one micro Bitcoin futures contract worth? As a reminder, this new micro Bitcoin contract represents 1/10 of 1 Bitcoin. So it's trading at 54,000 today. The micro Bitcoin future is worth a notional exposure of 5,400. So what does margin mean in futures? A margin is a good faith deposit that you post to establish a position in futures. So I I don't think we need to go over margin, but can you short Bitcoin futures contracts? Yes. Unlike most cash markets, I should say, on the crypto side, you can easily short a micro Bitcoin futures contract, just as easy as you can go long. So here are some of the benefits. Right? You can trade a slice of Bitcoin futures. So these micro Bitcoin contracts are 1/50th of our standard size. Remember, those are 5 Bitcoin per contract. These are 1/50th of that, or another way to think about it, it's 1/10 of 1 Bitcoin. So you have price discovery and transparency on the CME Group markets because we have a central limit order book where all prices and all orders go through the same matching engine. You can precisely scale your Bitcoin exposure with these smaller contracts, right? So these smaller contracts can add more control to a trading strategy. If you're trading only one contract, trading one Bitcoin, you can't scale one contract on a future side. So with these micro Bitcoin at 1/10, you can scale with them. Say either you're trading 2, 3, 4, 5 lots at a time. And then the capital efficiency in crypto trading, you could save on potential margin offsets with Bitcoin futures and options, and also our Ether futures. There will be margin offsets that we're offering if you're trading our other cryptocurrency products. So here's a side-by-side comparison of our micro contract, our micro Bitcoin contract versus the standard Bitcoin contract that we have today. Let's quickly go over this. The micro Bitcoin is 1/10 of 1 coin, which is 1/50th of 1 Bitcoin. The ticker on the micro side is MBT. Ticker on our standard contract is BTC. The minimum price fluctuations are $5 per Bitcoin for both contracts. But remember, because of the size difference, the micro Bitcoin contract is 50 cents a tick, while the standard Bitcoin contract is $25 a tick. And then everything else is the same. They trade during the same hours. They're both monthly contracts. They're cash settled products, and they expire. Last trading day is last Friday of the contract month. So let's take a look at the contract specifications for our Ether futures. So as I mentioned before, there will be some margin offsets if you wanted to trade the standard product, the Bitcoin options, or some of our Ether futures, along with the micro Bitcoin futures. So the Ether futures are allow traders to gain exposure to 50 Ether. The ticker on these futures is ETH. Price quotation is US dollars and cents per Ether. Trading hours are standard. They adhere to our standard hours, Sunday to Friday, 5 p.m. Central to 4 p.m. Central. The minimum price fluctuation on these Ether contracts, it's 25 cents per Ether, or $12.50 a contract. So the tick size is $12.50. So it's a substantially larger tick size on the standard Ether contracts. Again, these Ether contracts are also monthly. They're going to be they are listed in the 6 consecutive contract months, inclusive of the nearest 2 December contracts. And these are financially settled products as well. So just giving an estimate on the margins of these micro Bitcoin futures that are going to launch next week. If you're looking at the margin on our standard Bitcoin contract, which is a little over $100,000 today, if you're going to take 1/50th of that, the margin on the micro Bitcoin contract, you can estimate it to be around $2,000. And then here's an order book showing the minimum price ticks is 1 tick is 50 cents a contract, but remember this ticks in $5 increments. And then, so we're going to take a look at the micro Bitcoin, the Bitcoin and Ether futures, the differences versus the spot market. So in our markets, in these contracts, there's no wallet requirement. On the Bitcoin and Ether spot markets, there is a wallet requirement. there's capital efficiencies that our products offer that the spot market doesn't. Capital efficiencies and leverage is an interchangeable term that we use. The micro Bitcoin futures, Ether and Bitcoin futures trade on the CME Group order book, right? This is a regulated market. When you compare that to other spot exchanges, the other spot exchanges are a somewhat regulated market, depending on where you're trading and depending on how reputable some of these platforms are. There might be some tighter regulations. Since these are futures, you will gain potential tax efficiencies by trading the crypto futures contracts versus the spot, because the futures, if you recall, they adhere to the 1256 tax code, which is a blended tax rate. There is clearinghouse risk mitigation offering for our products, where the spot market does not offer that, because the spot market has all these independent exchanges that offer these products. And then underlying exchange business experience, we've been in business for 170 plus years, where these new crypto spot exchanges are relatively new. And we offer the ability to go short very easily. You can go short just as easy as you can go long through our contracts and through our markets, whereas the spot market, it's not as easy to go short. You can find a couple platforms out there that are geared toward active individual traders, where they will allow you to go short as just as easy as you can go long, but they're few and far between. And then looking at the transaction costs of our products versus the spot market. So when you look at the spot market, they typically charge a percentage exchange fee. And so in this example, if you were to look at how much you would pay for a micro Bitcoin equivalent in the cash market, so if the cash Bitcoin is trading at 62,000, you're going to purchase $6,200 worth of Bitcoin, right? The crypto exchange, if that crypto exchange carries a transaction fee of 1.5%, you're going to be charged $92 on that purchase. So your total cost will be $6,292 to purchase a $6,200 exposure to the Bitcoin, right? And then another thing that we want to keep in mind is the difference between the bid offer spread is another cost as well. So in our markets, we're expecting to have tight markets very shortly once these products launch. And when I say tight markets, what I'm looking at is how wide is that bid-ask spread? And we always want that bid-ask spread to be one tick wide, right? So that's where that indicates a good, healthy market, a good liquid market. And we're hoping for that very, very shortly after launch. On the cash side, and I did this the other day, I went in through a cash exchange. I saw where the cash was trading. There was a display on the screen where the ask was, went to go buy. Went to go buy, and it gave me a brand new price, which was a good percentage larger than what that cash price was that I saw on the screen. So be cognizant when you're trading the cash market that bid-ask spread is tight, and you're not losing out. All right, so let's talk about trading micro Bitcoin futures. So here's an example of a trader that's bullish on Bitcoin, and he wants to buy a micro Bitcoin futures contract, just one. So you'll see here, trader buys one May MBT future on May 3rd. The Bitcoin is trading at $59,000. So the notional value of one micro Bitcoin contract at that time is $5,900. The next day, the price of Bitcoin appreciates $2,000. So Bitcoin's trading at $61,000. They want to lock in their profit and sell their position at $61,000. Their position is now worth $6,100. If they get filled on that, they will profit $200. And that's excluding any transaction costs or broker fees or commissions. And let's talk about scaling. So we launched our micro complex years and years ago, but our micro futures really gained good popularity among the retail trading audience when we launched our micro equity index futures back in May of 2019. And something that our micro contracts offer the active individual trading community is the ability to scale in and scale out of their positions. Whereas if you're looking at a traditional E-mini trader, an E-mini S&P trader may have only been able to afford one E-mini S&P contract because of where the S&P was trading and the size of that contract, right? So you can't scale in and out of one contract. But when we launched micro contracts, which are mostly 1/10 of their corresponding larger counterparts, we're seeing traders gain the ability to scale in and scale out and trade more than just one contract. So with this micro Bitcoin contract, what we're anticipating is that traders will come in and they'll trade 1, 2, 3, up to 5, 10, hopefully a handful of contracts where they can scale in and out of their positions, right? So here's an example of a micro Bitcoin trader that has a long position of 5 contracts. As the price in Bitcoin appreciates, they can sell a portion of that position and lock in profits. So in this illustration, you'll see they're long 5 contracts. They sell 3 at a little over 57,000, right? They want to keep their exposure, some of their exposure, but they're locking in profits at a certain level. They're letting 2 contracts soar to higher profit targets. So you'll see that they sell another at a little over 58,000, and then they keep one on, and then they sell another at a little over 58,400. So theoretically, you can scale if you're trading 2, 3, 4, 5 micro contracts at a time. And just as you can put a position on and then scale out of the position, you can also scale into a position. So if that market starts coming back down, and this trader has an opinion that Bitcoin is going to come back down to, I'll say 56,000, they can put on one contract at 57. They can watch it depreciate, put another contract at 56.5, put another contract down at 56. So they're scaling into the position as that market comes down. So we're hoping that with these contracts, these new micro Bitcoin contracts, we're hoping that traders use these in very similar ways that they're using our micro equity contracts, our micro gold contracts, and some of our micro FX contracts. Okay, so let's talk about implied volatility. So we previously mentioned that we have options on the Bitcoin contract. And so implied volatility on those contracts is showing what the options market thinks about where the futures prices are going, right? And you'll see where there's some pretty large spikes in volatility here. You'll see back in March 2020, IV jumped all the way up to 180%, right? And so that's a pretty substantial mark, or a pretty substantial level. And then it came back down to earth and it's hovering around 60%. And then in December of last year, January of this year, it spiked up again to 160%. And now it's coming back down to earth. But what does this tell us? When you take a look at and this is annualized, when you take a look at the implied volatility ranking here, and when you look at the 50th percentile, at that 66 mark, what you'll see for one standard deviation move, you're going to see almost 2,500 points. So that's a move, for one standard deviation move is almost 2,500 points, which is a 50 tick move on the micro Bitcoin contract. So what this is telling us is that the implied volatility, or the volatility of Bitcoin, is there is price action in this product. The market is going to move. There are going to be, or we expect there are going to be, ample trading opportunities for traders to come in and capitalize on this price action or hedge some of their cash exposure with this price action. But when you look at this graph in front of you right now, we're looking at the implied volatility of Bitcoin versus some of our most volatile products. When you look at the gold, the EMA/SP, the euro currency, nat gas, Bitcoin, the volatility on Bitcoin, it's higher than all of them. It's greater than all of these other products. So where there's opportunity, where there's volatility, there is risk. So be sure to manage your risk appropriately, right? So on this slide, remember, the first thing here, it says, with tremendous volatility, some investors are curious about risk mitigation. It's something that I harp on constantly. When a trader is going into a volatile market, or when a trader is going into any market, you need to manage risk. You never want to be overexposed. You never want to leave yourself in a position where you can't manage it, right? And at the CME, we were founded on risk management. So we pride ourselves, and our clearing department prides itself on their ability to handle risk. We constantly work with our FCMs. We're constantly monitoring where traders are in the markets, and we're working with our FCMs and our brokerage partners to ensure that everybody has the appropriate risk parameters and risk tools in place to manage and mitigate their own risks as well. So you'll see here, CME Group has the power to assess additional margin and change margins on a moment's notice. If we feel that a market is too volatile, we can and will increase margins to ensure that people aren't overexposed and that we're properly managing the risk, and the exposure that's out there. So on this slide, we're taking a look at all the various traders and trading types that are in our cryptocurrency markets today, and the various ways that they're using our products, the futures and the options on futures, on Bitcoin and Ether. And we're expecting them to use the micro Bitcoin in very similar ways. So when you look at pension funds, what they're using our products for is asset allocation diversification, and also to hedge some of the portfolio's holdings. Hedge funds, you're looking at them using our products in long short strategies, but also to hedge. Maybe they have a cash position as well. You have prop firms. Prop firms are coming to our markets to market make. They also use them to go long short. The retail active trader, they're using these products to go long short in combination with options. But another thing, secondary in here, that we don't have is, I do expect people to come here to manage their cash exposure, to hedge some of their cash risk as well. And options traders, primary use is go long short, or income strategies, writing options if you're writing puts or calls. Bitcoin miner, they're coming to our market to hedge their strategies and go long short. And corporations are coming to use our products to hedge Bitcoin receivables and for treasury management. So that wraps up the presentation for today. If you want to learn any more about this Bitcoin contract, you can go to our website at cmegroup.com/AT-micro-Bitcoin, and you can see the specs for yourself. You can go in there. There's a video on there. There's ample information on these products. I'm also going to share this deck with Ironbeam, and I believe they're also recording this webinar, and we'll post it. But please go out there, do some research. If you are interested in this product, please go and do some research for yourself and make sure that this is a suitable tool for your trading strategies. So I believe we're going to do a Q&A now.
Hey, yeah, you know what? You did a really good job there because we've only got one question. You must have nailed everything, man. Hey, Valjean from FIO wants to know if you guys have any plans to add options on the Bitcoin micro futures.
So with all of our product launches, we launch with a futures contract first, and we try to build the liquidity on the future side. And when there is ample liquidity and enough client demand, we almost always inevitably offer the options, but we just don't know when that will be. So on the Bitcoin, on the big Bitcoin, it took about 3 years, a little over 2.5, almost 3 years to offer the options. So I expect we'll offer options at some point. I just don't know when.
Excellent. Yeah, probably will take a little bit of time, no doubt about it. But it seems like the interest could very well be there. So pretty interesting stuff.
You'll probably see the liquidity build a lot faster than the original Bitcoin launch, just due to the contract size.
Sure, a lot more people get to play, right?
Yep.
Right on. Mike, do you have anything to add?
I don't think so. Appreciate everyone coming. If you do have any last minute questions, probably try to sneak them in right now before we hop. But appreciate futures.io for doing this for us, and for John for presenting. I know he was kind of a last minute shoe in here, and I think he did pretty well for the short notice presentation. So thanks again for that.
Yeah, absolutely.
My pleasure.
Yeah, that guy hit the ground running, didn't he? All right. Yeah, guys. Well, fantastic. Thank you again, Mike over at Iron Bean and John with CME Group for being here with us today. We really appreciate it. Folks, that just about wraps it up. Be sure to join us for our next event on Thursday, April 29th. We're going to be speaking with Bruce Pringle of Bookmap regarding iceberg indicators and MBO data. Also, don't forget, please visit our YouTube channel for more quality trading videos like this one. While you're there, like it, share, and subscribe. Again, I thank you for joining us, and trade well.